what we'll see in the next 20 to 30 years, in many ways, the fundamental change to how people buy personal lines insurance. We'll see a movement from individual discrete products that are priced on quite a simple basis to much more of the insurers using a combination of big data, of very sort of focused data and machine learning and all sorts of analytics, really becoming more of a risk partner than simply a payer in the case of claim, helping the individuals understand what they need in terms of insurance and making sure that every aspect of their life is covered in a way that suits their particular risk appetite and needs.
So over time there'll be increased collaboration, I believe, between incumbents and insurtechs. The way we purchase insurance as consumers, that will evolve. I believe right now most insurance that we do, it's more of a grudge purchase. We don't do it with too much verve. I'm not saying we're going to do it with much verve, but it'll be much more a convenience purchase. When we purchase an underlying asset, it'll be attached on. When we make other financial decisions, it'll be attached on. So I think that the big incumbents over time need to get accustomed to the idea of becoming a little bit more invisible and letting others be the front end of insurance.
Well, the world of insurance will change massively in the next 20 years. Business in general is changing, boundaries is becoming quite blurred between business, people and things. Take for example the connected cars and autonomous vehicles. You can easily hack them with a simple attack or compromise the privacies of the owner. This is an area where insurance will become quite important because it's related to casualties and maybe lost properties. So more of focus on the type of data that is going around and the risks that are coming in, that will become quite massive and hugely important for underwriters and insurer carriers moving forward.
Well, I think we're legitimately at a jumping off point for technology. We've spoken about it as an industry for many years around how we use telematics, but the proliferation of autonomy, be it level 1 to level 5, is going to drive how we build insurance products and assess risk as we go forward. I mean, what's really interesting for me is that for the very first time, consumers are able to provide heightened levels of data and they're happy to share it as long as there's a tangible value for them. And we're going to move risk models to not how people drive, but maybe where they drive and what time they drive, and it completely changes the traditional insurance models around risk assessment. And that's incredibly exciting because we can bring amazing new technology and new thinking from outside the industry and embed it within the core values and traditions that make this the center of the insurance universe.
I think that algorithmic processing and artificial intelligence will enable us to really accurately assess the likelihood of risk occurring and the loss that will result as a result of that. And with that comes almost a kind of paddy power ability to check in and check out of risk with a fixed price because you know the likelihood of something happening. It becomes very almost like online betting, I think.
I think some of the major players that we have today will still be around, but they will have much more nimble business models. I think they will have a lot more different brands that speak to niche areas and offer specific technologies to niche areas. And there will be a lot of newcomers into the marketplace, I think, as technology really mixes up the insurance space, which has been transacted in the same way really for a very long time. I think it's very ripe for technology to come in and new entrants who are adopting those technologies to really change the landscape of the competitive landscape.